Hey guys, welcome back. Welcome to the first video that covers the reporting worksheets, which correspond to the green colored tabs at the bottom of the spreadsheet, as you can see here. This video covers the summary worksheet, which will likely be the reporting worksheet you use the most since, as the title suggests, it's the summary tab and it has the most useful information. It's broken into three sections. The top section, which is in rows 4 through 17, as I'm highlighting right here. These provide you with pie charts that show your revenues against your expenses. Then you have rows 18 through 41, and those provide you with the rolled up numbers for your revenues and expenses for the selected month. And so for the selected month here, as you can see, is November. And it's showing you for the month of November here in columns C to E. It's also showing that to you for the year to date, which is since the beginning of the year all the way up to today's date, which is November 17th, and the forecast to the end of the year. So where do you think, or where is the spreadsheet calculating you will be based on your budget numbers at the end of the year? And if you scroll down a little bit further in rows 43 here, all the way down to the bottom 103, what that gives you is your account balances for both your bank and your credit cards. So there's a lot of summary information here, and it might initially feel a bit overwhelming to look at, but the trick is to look at it section by section. When you do that, you'll find that it's pretty straightforward. What I'm going to do here is I'm going to walk you through this worksheet. But before I do that, let me just say that I went back and made some entries in the budget worksheet to help you understand the advantages of putting in budget numbers in the budget worksheet. So let's take a look at the budget worksheet. So if I click here, you're going to see here in October, November, and December, I actually went in and added in some budget numbers for your revenue categories. Here I put some in for your pay. If I then expand that over for the clothing, you can see that I put in numbers for clothes to the end of the year. I did the same for education and work, where I put in, for example, stuff for your bus pass, and I did a few other entries under entertainment for movies, Spotify, Netflix, and then did the same thing for groceries and house. So groceries, just buying food, and house, in this case, I think what I did was as if you had an apartment and therefore paying a rent for every month. And so in doing that, that just allows us to be able to get a little bit more feel for what the summary tab does for you and put that in context against a budget. And these budget numbers are going to be displayed in the worksheet or the summary worksheet. So let's go back to the summary worksheet. So I'm going to click on that, and what it's going to do is just update that worksheet for us. And here's how we go ahead and use or take a look at this particular worksheet. So first, the only thing in this worksheet that you can change is the summary month. And this always defaults to the current month. So it takes a look at today's date. So today is November 17th, and therefore it knows we're in November. And that's why it defaults to looking at the numbers for the month of November. You can, however, at any point click on the down arrow and change which month. So if you want to go back in time and take a look at the numbers, for example, in October, you can do that. And now it'll give you all the numbers for October. And we'll get into the details of what these numbers are. But just know that it defaults every time you come back to this tab to the month of November. Also just know that the month that you select here in this cell C2, that only affects the numbers in the columns C through E, which is the numbers for the current month, and also only the numbers in the rows 4 through 41. of the spreadsheet. Everything else below this row and to the right of column E, so everything else here, always stays fixed because that's always for a year to date and for the remainder of the year. So again, changing this month here only affects this left-hand portion of the worksheet. So let's start by taking a look at columns C through D in the rows 4 through 41, which basically tells the spreadsheet to show the revenue and expense numbers for that selected month, which in this case is February, in those rows and columns. And so first, if we take a look at the first few rows here, so 4 through 17 for columns C through E, what you've got there are the pie charts. And the pie charts show you the totals for your revenues and expenses. And what it does that for is for the month, which is for the month of November in columns C through E. So here's the pie chart for your revenues against your expenses for November up to today. It does it also another pie chart here in columns G through I for your year to date, which means all of your revenues and all of your expenses all totaled up since January 1st all the way to today's date. And then it does it again in columns K through N for your total forecast for the year. And so that is from January 1st all the way to the end of the year and reported as of today's date. So these pie charts show you your revenues or show you how your revenues and your expenses compare. And they're based on the detailed numbers that you see in rows 18 through 41. So all these numbers here that you see, these are the detailed numbers, and they all roll up into these pie charts here. So for example, take a look at the first leftmost pie chart, which is this guy right here. Okay. Now, it says that the total expenses are $600 and your total revenues are $3,500. And it also shows you as a percentage. So it's showing you that 85% is your revenues and 15% is your expenses, which is good because it's showing that as of November 17th, you have more revenues than expenses. Now, the $600 comes from totaling all of your expense categories that are here in the expense section. So it's totaling all these guys here for the month. So all these numbers here, which gives you the $600. So that's where that comes from. And your $3,500 comes from cell C19, which is totaling up all of the subcategories of revenues all the way up to the revenue category number itself. So $3,500 of revenue, which in this case would all be, for example, your paychecks. Now this pie chart is showing you the results for the month of November and as of today. But like I said before, if I go back and select a different month, it's actually going to show you for all of the month because this is past or in the past. So October is already a thing of the past. So it's not saying as of today's date. It's just saying for all of October, here you had $18 or $1,800 of revenue versus about $1,100 of expenses. So when you go in the past, it shows you the total for the entire month. And when you come back to the current month, which is November, then it shows you obviously only up to today's date because you have no transactions that are still to come in the future and haven't been accounted for. Next, you've got the pie chart that appears in columns G through I. So this pie chart right here. And that provides you with the same kind of pie chart, but this time the numbers are the totals for the year to date, meaning from January 1 up to today's date. And then finally, you've got columns K through N, which are these columns here, and therefore this pie chart here. And that pie chart this time around gives you a little bit of an interesting perspective. So the pie chart is in the form of a forecast for what your total revenues and expenses are going to look like at the end of the year if you stay on your budget numbers. So your budget numbers, as I entered here, I showed you before. Let me just collapse that all up. I showed you these are your budget numbers to the end of the year. So it says if you stay on these budget numbers, if you're still anticipating making, $2,000 per month every month and all these expenses every month per month to the end of the year, then this is where you're forecasting to be at the end of the year. And so to understand what that means, look at the title that is in cell K18 that I'm highlighting right here. And that says your remaining forecast from basically tomorrow's date. So today is the 17th. So as of tomorrow to December 31st, to the end of the year, this is what your remaining forecast is going to be. So it says based on what you said in the budget, so from November 18th to December 31st, you're still forecasting, according to your budget, to make another $2,000, which is going to be the $2,000 in December, right? According to your budget here, right? This number here. And in terms of your expenses, it's saying, again, based on your budget, your remaining forecast is all these numbers for all these different categories. So it's saying your budget is telling us you're still going to be spending a total of $2,500, 2540 or $2,540 from tomorrow to the end of the month. And that's why we call these numbers your remaining forecast to the end of the year. So now, if you add the numbers from column G, right, which is your total as of the beginning of the year all the way up to today. So let's say, for example, up to now, we've got $5,300 of revenue. And we add that to column K, which is the remaining forecast to the end of the year. Then what you get in column L is the total of both. So 5,300 plus 2,000, 7,300. So it's saying your forecast to the end of the year is according to what you've had so far, plus your remaining budget, says you're going to be at $7,300 at the end of the year. And that's why we call it the total forecast for the year. So it's actuals plus what you forecasted in your budget. And so now this pie chart here is telling you in columns K through N, it's telling you that your total forecasted revenues to the end of the year is $7,300 and your total forecasted expenses is about $4,250 to the end of the year. So in summary, the pie charts give you a quick informative view of your total revenues and expenses for the month, the year to date, and the forecasted at the end of the year. So it quickly allows you to see if you have more revenues than expenses. So really, it's just a quick way to figure out or take a look at these pie charts. If you're only interested in saying, hey, am I going to have more revenues than expenses, or am I going to be in trouble either at the end of the month or at the end of the year, you could basically just take a look at these three pie charts and have the answer to that question and not take a look at the rest of this summary worksheet if that's all you're interested in knowing. If you're interested in getting a little bit more details about your revenues and your expenses, that's what rows 18 through 41 will provide you with. It'll give you that level of detail, right? And again, just like the pie charts, what it does that for is for the month, right, which is in columns C through E, the year to date, which is G through I, and then finally for the total forecast for the year, which is K through N. So let's dive a little bit more into the details here, and I'm going to highlight row 18 because that's the titles for the columns of numbers that follow it. So cell A18 indicates or shows the names of the revenues. Sorry, right here. I had the wrong one highlighted. So this gives you the names of the revenue sections as well, or revenue categories, as well as your expense categories that you have defined and that we showed in the categories tab video. Cell C18 indicates this column is going to show the total numbers per category. And if you are in the current month, the totals will be up to and including today's date, just like it's showing here as of November 17th. For any other month, the totals will be for that month, so for the entire month. In cell D18, this indicates this column is going to show you what are the budget numbers from the budget worksheet for the selected month. So here it's showing that in November, you're saying that your revenues that you've budgeted are going to be for $2,000. And indeed, if I go to November and I take a look at my revenues column, it's showing me $2,000. And that's where that number is coming from. And it's doing the same thing for the rest of your expense categories. Now, cell E18, where it's written difference, indicates this column shows the difference between your actual revenues and expenses and what you have in your budget. So here, the difference between your actual, which is 3,500, and your budget, which is 2,000, the difference is 1,500. And numbers highlighted in green indicate that you're doing better than your budget, which is the case here because you're making more money than you budgeted. And numbers highlighted in red, so for example here where I've spent already 250 but my budget was 100 for the month, so items in red indicate that you're doing worse than your budget. Columns G through I do the exact same thing, except that this is for the year to date. So as of November 19th or November 17th, so starting from January 1st to today, up to now, we've had $5,300 of revenue year to date against a budget for the year to date up to the end of November of 4,000. So I'm still ahead by $1,300. So it does that for the year to date, and then it does it yet again for K through N based on your remaining forecast to the end of the year. So now it's saying with the remaining forecast, I'm forecasting to be at 7,300 total revenue against a total budget for the year for $6,000. So at the end of the year, I'm still forecasting to be $13 or $1,300 ahead or higher than my budgeted revenue. So that's a good thing, right? That's why it's in green. However, for my clothing at the end of the year, I'm still going to be a little bit overspent by about 72 bucks. Some others I'm going to be underspent, which is good. That's why they're in green. But at the end of the year, it's telling me that the difference is still going to be $149 ahead for all of your expenses. And then at the bottom, which is revenues minus your expenses, overall, you're going to be close to $1,450 ahead of your budget. So you're doing better in this particular case. So it's doing that for your revenues. We only have one row for revenues because you only have one revenue category. It has multiple subcategories, but it rolls it up to this revenue category here. And then in 22 through 38, it does it for each one of your expense main categories that all have subcategories. So for example, clothing has got as subcategories clothes, coats, and jewelry, for example. Those are all subcategories, and then it just rolls it up to the main category name, and that's why you just see the total. So it doesn't provide you with the detail, and that's fine because the summary sheet is just meant to show you the rolled up numbers per category for your revenues and expenses. If, however, you wanted to see the full details of all of your revenue categories and subcategories, you could do that by going to the budget versus reality and forecast worksheet, which we'll get into in another video, but you can see here that you've got all of your subcategories that are listed for a category. So here, these were all the subcategories of revenues and where you can see where all your numbers are listed, right? So for example, your budget amount that's listed here and what you've had months to date all rolled up here. And so that will give you the full detail, but the summary sheet will just summarize that up and makes it a lot easier to take a look at. So finally, in this section here, row 41 is just the revenues minus the expenses, right? So Total revenue of $3,500 minus total expenses of $600 for the month of November gives you now the total or the revenues of or revenue minus expenses of $2,900. So it's showing that right now you're ahead of the game. And for your budget for the month, you were forecasting to be ahead of the game by $534. But since you're doing better than your budget in terms of the difference, it's now showing that you're actually going to be ahead by $2,366 according to your budget. So you're doing well. It's in green, and so it's all good. And that's really what you're trying to figure out. Am I in the green or am I in the red? So now let's scroll down to the last section of the summary sheet, which is the account balances section. So in this last section, which is from rows 43 all the way down to 103, and that may sound like a lot of rows, but it's just some detailed numbers that you can roll up. Um, these rows are simply meant to show you the balance amounts of all your bank and credit card accounts as of today's date. So it's pretty simple. We'll take a look at them piece by piece. It starts with rows 44 and 45, which really just focuses on your main bank account, which is typically your checking account or your operations account. And that's telling you, well, here is your bank balance as of today for that particular account. But it's also showing you where it's forecasting that balance to be at the end of November. So it's the same idea. It's looking at your budget numbers that you put in for the month. And if you stick to those budget numbers, then it says that at the end of the month, this is where your bank balance will be for your checking account. It's not a precise thing, even though the numbers here, $2,617.29 feels precise. It's just based on your budget numbers, and it's meant to just give you an indication that at the end of the month, here's where we think your bank balance is going to be. And then it does that also forecasted at the end of the year, which is it's taking a look at the remaining budget that you have in your budget sheet for from now to the end of the year. And it's saying again, if you stay on that remaining budget based on what you already have and continue to forecast in your budget, then if you do that, then at the end of the year, the bank balance that's forecasted is going to be, in this case, close to $3,200. And again, that's just meant to give you an indication, and it's all based on if you continue on your budget as you have in your budget tab. Okay, so now let's take a look at rows 46 to 72 that provide you with two pie charts. So this section here, 46 to 72, and you've got the two pie charts that are there. So in the first pie chart to the left, which is columns A through E, this one here, that is the pie chart of all your bank account balances. And the bank account or the bank accounts shown here are the ones you defined in the bank accounts worksheet. So I can see a couple here that are listed: investment 1, 2, checking, savings, so on and so forth. Those are the exact same ones as what you have defined here all the way down to other, which are all at 0, but you have your main ones here. So it's really just taking a look at these accounts here, taking a look at your opening balances that you had provided, and then factoring in all your transactions since then. And it's showing you now, sitting here today, here are your bank balances, and shown in the pie chart. The balance amounts that are displayed in the chart are as of today's date, so as of November 17th. Notice that there's a sample mortgage account that has a negative number, so minus 1,000 here. And that is just to show you that you can set up separate accounts for things that you owe. And so mortgage is a good example, or a car loan. And you can set that up in the bank accounts worksheet. And when that's the case, when it's amounts that you owe, what you do is you enter a negative balance for those cases. And Doing so will allow you to see these account balances in the summary worksheet. So if I take a look at this mortgage at minus 1,000 in my bank accounts, you can see here on row 8, I set up that mortgage account. And let's say in this case, it says that as of October 18th, I still owed $1,000. And you could add another line here if you have a car loan payment, and you could call that car loan and then indicate how much you owe using a negative number. So positive numbers, of course, are your bank balance in terms of how much you currently have as a positive number. And then, as I said, loans are negative numbers. And that's how you can get to see those numbers shown up in all of your, or this pie chart that shows all of your bank account balances. And it'll just show up as a negative number, but it shows the size and percentage of everything else in terms of your bank accounts. Now, columns G through K do the same thing, but for your credit card balances. So here I can see I got 3 credit cards, my Visa, my MasterCard, and my Amex, each with their current balance as of today, and the percentage of the overall 100%. So 73% is coming from my Visa, 13 and 14 are coming from Costco and Amex respectively. Okay, and then finally rows 73 through 103 just contains the detail numbers for each of the banking and credit accounts that you're tracking. Now you can see here I've got a whole bunch of rows that I've got, for example, under my bank accounts that I've got other and $0 in there. And the fact that they have got entries here, that means that they also show up as these other in the pie charts above. And it's the same thing for the credit cards. If you want to take those 0 amounts out of the chart and just keep it relevant to things that actually do have money in it, then you can go here to cell C74, hit that drop down arrow as we've shown in some of the filtering capabilities in previous videos. And I'm going to uncheck the $0 amounts and click OK. And that's now going to clean up your pie charts to remove those $0 accounts. Okay. You can do more filtering here if you wanted to now just focus on certain accounts, removing some of those and checking those. So let's say I don't want to see my investment accounts as part of this pie chart. I can remove them here, click OK. And now my pie chart is going to reflect these bank accounts without the investments. So just to show that you can apply filters to the data, and that will also be reflected in these pie charts here above. And that's it for the summary tab. Like I said, a lot of information in there, but just take it section by section, and it actually becomes pretty straightforward. So you're either looking by the month, year to date, or your forecast to the end of the year when it comes to your revenues versus your expenses, or you're going down here to take a look at your account balances for both your bank accounts and your credit cards and get a quick peek at what are the amounts in each one of those. And that's pretty much all the information you need to know. You have more detailed information in that budget versus reality and forecast tab that we talked about. That's the subject of another video, but this is probably the tab that or the worksheet that you'll be looking at the most, just to get a quick understanding of where you are with your expenses as well as your revenues. So we'll see you in the next video.